Hi, I'm Michael Ruger. I'm the managing partner at Greenbush Financial Group. The Senate recently passed the CARES Act, which was the U.S. government's response to help support the U.S. economy due to the containment efforts of the coronavirus. And one of the main features of this legislation are individual checks that the IRS intends to cut to individuals and members of their family to help financially support them during this difficult time. So this video, I'm going to go over how much those checks are going to be for, who's going to be eligible to receive those checks, and more importantly, when taxpayers should expect to receive those payments, even though we haven't gotten a ton of guidance out of Congress yet. Okay, so the amount of the checks. So the government is going to be sending a check, $1,200 per person, plus $500 for each child that's within the household. So if you look at a family that's got 2 adults and 3 children, they would receive approximately $3,900 in the form of a stimulus check from the government associated with the CARES Act. Now, there are income limitations. Let's say if you make over a certain amount, you're not going to get that full payment. Now, here are the income limitations. So if you're a single filer, if you make $75,000 or less, you are entitled to that full stimulus payment. If you are married filing joint, if you make under $150,000 in income, then you are entitled to the full stimulus check. Now, if you start getting over and above those thresholds, there's a phase out limitation, which says for single filers between $75,000 and $99,000, that amount starts to decrease. And at $99,000 for a single filer, you get no check. Anything $99,000 and above. For a married filing joint, the phase out threshold is between $150,000 and $198,000. That's when those checks slowly start to decrease. And then once you're at $198,000 and above, there's no stimulus payments made to you. So the IRS is going to determine your income by either looking at your 2019 tax return if you've already filed your tax return for 2019, or if you haven't filed yet for 19, they're going to look at your 2018 tax return to determine your income threshold and eligibility. Now, there's some taxpayers that haven't filed a tax return for either of those years. In that case, they will look at your Social Security wages or income to determine whether or not they're going to be sending you a check. So we already received the question that if I was making more in 2019 and I'm not eligible to receive a check, but I've just been laid off in 2020, so I don't anticipate on making that amount this year, like, do I still get a check or what happens here? So technically what these checks are they are a tax credit for 2020 that they're just sending to you in advance. So they're saying, hey, this is a tax credit, but instead of making you wait until you file your taxes for 2020, we realize a lot of people need this money now, so we're just gonna send it to you in the form of a check or an ACH. But for people that are above those limits and are for 18, 19 that wouldn't otherwise get a check but see a drop in income, you won't get a check now, but when you go to file your taxes for 2020, that's when you can claim the tax credit based on your 2020 actual income. So here's a different scenario around that same concept. Let's say your income made you eligible to receive the check now, but in 2020, your income is going to be higher, otherwise making you not eligible based on those thresholds. Do you have to give the money back when you file your taxes for 2020? So this is one of those gray areas right now that since literally the bill just got passed yesterday that we don't know the answer to. But as of right now, there's not any specific language in the bill saying, hey, if we send you the check, we are then going to recapture that when you file your 2020 taxes. But again, as of right now, it's not clear, and we're going to have to get guidance from the IRS on that. So the next question is, how long is it going to be before you receive these payments from the IRS? Now, there's 2 ways that the IRS can remit the payments: via direct deposit directly to your checking account, or they can send you a physical check in the mail. Now, it's most likely going to be the IRS preference that they can send as many direct deposits as possible because it gets to the taxpayers quickly. Now, if you've ever received a refund from the IRS directly to your checking account, or if you paid taxes to the IRS directly from your checking account, that means they have your checking account information on file. Now, the one issue that comes up with this is, what if you've closed that account or changed that account from the last time you filed taxes or received a refund? We don't know how they're going to address that. If they're going to accidentally send it to the wrong account, or there's going to be some way to jump in the middle of this to say, don't send me an ACH because I don't have that account anymore. That's something that they're going to have to clarify. But the ACHs, or these direct deposits, allow them to get the money to taxpayers quicker, and they might receive them as early as April. Now, if they go the physical check route because you've never had any type of direct deposit relationship with the IRS, that could take longer. And our only point of reference of this is back in 2008, as part of that stimulus plan, they did send checks out to Americans, but from the passing of the bill to the time people actually received the checks, it was like 2 months. So if they follow that kind of same type of timeline, it might be towards the end of May before taxpayers really receive those checks from the IRS. Now, we intend to keep posting additional videos as we get more clarification from the IRS and as more stimulus packages come out to help individuals. So please feel free to subscribe so we can keep you up to date with those items. If you have any questions, feel free to reach out to us at moneysmartboard.com. Thank you.